welcome to this Mobey Forum's media webinar, Game of Phones, the Tech Giants Power Play in Mobile Payments. We are really happy to share with you the key findings that our host card emulation workgroup has come up in this report. So my name is Sirpa Nordlund and I'm chairing this webinar. I'm happy to introduce our speakers as well today. So we have Zaf Kazmi, responsible for mobile channel strategies from Erste Bank, and Kristian Sorensen, who is responsible for market development and strategies at Nets. So Zaf and Kristian have been chairing this work group that has been working now for already some time, and this is a snapshot of some of the interesting ideas that have come up. But before starting, just a few house rules. Everyone has been placed on mute, so we want to ensure that there is no feedback or disruptions on the line during the presentation. And Zaf and Kristian will discuss approximately about 30 minutes and then address the questions for another 10-15 minutes. And you can submit the questions to Mobey Forum, who is the host and the presenter, via live chat function that you see on your screen. So at the end of our presentation, we will then review all those questions and make sure that you will get answers to those first come, first served basis. But in case we don't have time for all the questions, then we will come back to those unanswered questions within the next 24 hours or so. And if you have any follow-up questions or anything like that, you can contact us, or if you represent media, then ICPR, who is progressing on our behalf. And finally, we will also distribute the PDF copies of the paper, so for all the participants in this webinar, and the presentation, and also the link to the webinar, and for media, also the press release. So immediately after the webinar is over. And and of course, it will be also available in the Mobey Forum website. Just a brief look for those who don't know who we are, Global Industry Association. We empower financial institutions to lead in the future of digital financial services. Of course, mobile as well, but with a little bit broader scope of digital. We are connecting thought leaders, as you may see, as a result of this report. We have members who collaborate in this forum, but also outside of this forum. So we have work groups. Currently, we have host card emulation work group. We have biometrics and security. We have risk mitigation and predictive analytics as our work groups. And we meet 4 times a year, always hosted by one of our members. And we are also a non-profit organization led by the board of directors that you will find in our website. You can see our members. They include very good experts in this complex area. So we have banks, we have vendors in from various type of technology perspectives. We have payment processors. Very good member base. And now coming to present our speakers today and giving the word little by little. So Zaf from Erste, Kristian from Nets. I would like to welcome you. Say the stage is yours. We will unmute you now. Hello Zaf. Hello Kristian.
Hello.
Hello there.
So, a very good afternoon, morning, evening, depending which part of the world you're in, to everybody. So, before we, Kristian and I, get into the depth of this webinar, we thought we try to present to you as to how and why did we get to write this third white paper. So as we were, as a group was finishing the last white paper within this HC series, we realized that we'd get to examine the current state of the play in the whole mobile payments ecosystem, and more importantly, to draw out the most significant factors for banks to consider in defining their mobile payment strategy. So that was the kind of the drive behind this. And as doing that, we started looking at the current state of the art of the mobile payment as a whole ecosystem. Then we also realized, as we were working, as the group was working towards this report, that the banks could not just afford to sit around and wait. They had to really act as quickly as possible, and of course there were a number of key factors. So this is the kind of the background. So the way we're going to do this today is a quick agenda. So this is just on your screen right now. So we will quickly highlight the plot itself. How did we got to the basics of this white paper. Then we will talk about different battles within the pays. Then we talk about device control factors, business control factors, and so forth. And then towards the end of this webinar, we'll try to deliver to you the key takeaways. In no way this is the full comprehensive list. There's some of the key takeaways that are taken away from the paper. So so this is the kind of plan for today. So some of next slide, please. So some of the key factors that we felt that a bank should take into consideration when they step into this arena was to ensure that the current rules and regulatory trends have been followed and what impact they would bring in, how the payment schemes altogether with their offering would evolve, so tokenization, what have you, and of course the role of the aggregators, the local payment processors, how they would play their role as well, and not to forget the future we see on Android. I mean, one would like to believe that it's the case, it's always there, but who knows, it might change in the future. So those are some things, along with the fact that the real value behind adding more services than just payments when it comes to the whole mobile payment implementation for a bank. And of course, something new that came up was the security behind the tokenization. So, how would a bank would deal with that? So these were the kind of key factors we felt, and the group came across as we were producing this report. So we tried to highlight that. Next slide, please. So basically, we also realized that there were a number of technological approaches behind this kind of battle of pays, if you like. So we knew that when it comes to Android Pay, for example, it's a pure HCE only. So it's kind of, if I could say, put it this way, software only. SE, so there's no kind of physical SE behind. So as opposed to Apple Pay and Samsung Pay, whereby you would need some sort of embedded chip on the device itself. So just kind of goes to show the kind of differentiation between one or the other implementation. And of course, hardware or software, so we knew that Android Pay would certainly become a real attraction for a bank since there's no physical SE involvement. And the thing that was common within all these solutions, whether it's Apple Pay, Samsung Pay, Android Pay, or even banks' own pay, is the technology behind. So it's all NFC based, so that they should work in the existing within this existing NFC infrastructure. And of course, something else that we also realized was quite of value we felt was the branding of the wallet itself. So we also realized that apart from Apple, all offerings, so Samsung Pay, Android Pay, would allow to have another NFC-based wallet to coexist within the device. But having said that, all OEM Pays would want to brand, there's no much room for a white label wallet within it. Kristian, I'm not sure if you, are okay with what I'm kind of, what I've been presenting so far, and perhaps maybe you want to say a few words.
Well, I'm quite okay with what you've said so far, Zaf. Thank you. Maybe just adding one perspective that we also came across in this work was one dimension was to understand the basic hardware, the basics, elements of the different solutions, but it was also increasingly important for the participant to understand the consequences of these different technologies, these different approaches, and that was what led us to further analyze the control factors that we will dig into now. And the control factors is basically an approach that we from Mobey Forum have applied before in our research, finding out not just the traditional stakeholder analysis, but also what these different stakeholders are fighting for, which kind of positions they want in the market, but also maybe even more importantly, what kind of position they can take in the market. And while we have cheekily named the paper A Game of Phones, it's not just the phones anymore. The phone in itself is, of course, an important element, and it is by far the biggest catalyst of the development in these new types of payment scenarios. But if we expand the ecosystem on the phone, well, not to the whole big payments ecosystems as we also often talk about, and we will get back to, but looking at the device itself, there are of course the physical hardware and the control of that, where of course the hardware manufacturers, Apple, Samsung, Microsoft, they have a strong presence there. And once again, this is not just about phones, but also about other smart devices. It can be anything from wearables to consoles, gaming consoles, to even, we saw very recently Samsung smart fridges also allowing for payments, and that is as far probably as we can get from a mobile payment scenario, as I will probably not anytime soon bring my fridge with me when I go shopping, but it might be the other way around, that the fridge actually does the shopping. So with these kind of connected smart devices, we are also seeing a movement towards the start of Internet of Things, where we move from interacting between these different smart devices to a degree where we see transactions between the smart devices as well. Of course, the different hardware manufacturers are excellently positioned when it comes to hardware control. Then we move towards the interface, the customer interface, which is very tightly linked to the brand of the wallet. We have so far in Mobey typically focused on bank-branded wallets or bank-branded payment solutions. We've also looked at the MNO branded payment solutions, and now more recently the OEM Pays, or the brands of the OEMs have taken center stage when we talk about mobile payment solutions. Obviously, we haven't seen Microsoft in the market just yet, but that doesn't, of course, mean that that they don't have a play here. So while Microsoft might be struggling a bit with in terms of market share when it comes to handsets, their market share in terms of other devices and other smart devices is quite significant. Another area is the biometrics area, and that is when these players start to tap into not just delivering hardware, but also start to play a role offering ID solutions to the market. And that means that they will play an increasingly big role, because as banks start to embrace these kind of very user-friendly solutions and ID solutions like Touch ID, they at the same time allow a new player, and not just allow, but also start to depend on a new player in the flow of the user journey. And that is something that I think many banks have not yet come to terms with. So in terms of what does that mean for the way that we conduct our business, and what does that mean in the way that that we rely on others. And Zaf, you as a banker would very much like your, and also as a security specialist, like your comment on that. But maybe just finalize this chart by mentioning that the OS control is also something that we see increasingly powerful, since the OSs are increasingly used across different devices, And that is where the likes of Microsoft, with their launch of Windows 10, where you have the same operating system across a number of different devices, are in a very good position to leverage that. But back to my question, Zaf, you as a bank, where do you see these players interact, or how do you see the dependency to these players from a bank that embrace these kind of technologies?
Sure. So I think this is the key thing here, really. I would try to answer your question in a way that I also kind of I fully agree with what you're saying, and I think for a bank, if I take these say the four column, the top headings, I think the wallet branding, I think that is really something that bank would really would like to have their take in it, because branding is really important for a bank, because this is where this is what your customers see, this is how you reach out to your customers. So this is and customers obviously the most important thing for a bank anyway. So this I would say that the wallet branding and a bit of biometrics, this is the main kind of two major interest kind of topics for a bank. Having said that, I think the more hardware control and OS control an OEM or a third party has, the less control a bank would have on their offering. So it kind of goes hand in hand. So I would really feel that the sooner the banks act, the better it is, because it's getting late already. We see more and more OEM Pays, getting their grip around the hardware and OS, such as Apple got the iOS. Samsung is not there yet, but we do know that they have their own OS as well. So I feel that all in all, banks really have a difficult kind of stage already, and they really have to really start acting. But I think one thing that we can really, as a bank, keep our foothold is the wallet branding. That's something that we should really pride ourselves in and try to really, really capitalize on one thing. That's my take on this.
Thank you very much, Zaf. So if we move to the next slide, then this is just for clarification before we move on to the commerce control points that we would like to cover as well. And that is something that we have seen causes a lot of confusion, and that is the in-app commerce versus in-an-app commerce. Let me try to briefly explain, just for, this might be known stuff for many of you, but just to make sure that we agree on what we talk about here. In-app payments have existed for a long time, and it still exists, and that is basically where you buy virtual goods. That can be any premium content within an app. It can be new stages on a game, or it can be the proverbial Smurf berries or the likes. And these kind of in-app payments, which are mobile commerce in a way, are typically handled as a card on file scenario, where the shop is the actual OEM or the OS provider of the solution, and that is something that sort of still lives its own life. It's fairly lucrative for some of the players involved, and that seems to be somewhat unchanged, at least for now. But with the introduction of OEM Pays, we all of a sudden see an integration to the basically in-an-app purchases, where you see the support for the purchases of physical goods within the apps, where you still leverage the ease of use that the OEM Pays have introduced, as well as a higher degree of security that allows for better deals, basically, when it comes to the fee structure. And that is something that the combination of the increased usability, as well as a more attractive e-commerce proposition, put the OEMs in a very interesting position when it comes to accelerating the use of e-commerce and in-app purchases, or in an app, if we should be try to differentiate those two. Then, of course, we have the whole proximity payments, where you use any NFC or MST technology in the case of the Loop Pay support in Samsung Pay. That is pretty well described, and I think we all understand the concept of tap and pay. And with this in mind, I think it's one thing that we've been discussing in the group is that even though this is the scenario that have probably gained most attention, is this the most popular scenario going forward, or is this the winning model going forward? And one question that has come up is that if these OEMs really believed that the point of sale scenario was the number one winning scenario, why on earth aren't they in the POS business? Why don't we see an iPOS from Apple or a Samsung POS or something like that? So what we have been discussing as a very likely future scenario is the growth of in-app in-store payments, where you basically utilize the convenience of the OEM Pays and the ease of integration into the store's own apps that allows for a higher degree of self-service and also increased convenience for the end user. That is a development that we will follow closely and probably also cover more in future papers from Mobey. But moving to the next slide, this is it's important to keep this in mind when we discuss e-commerce reach. Looking at the different players across the e-commerce, the in-app or in-an-app support is very key for these players' success, and that is, as I said, something we will follow with great control, or with great interest. Sorry, but something that we have yet to see is if any of these really will start to move into the physical commerce space through the physical devices. So that could be the rollout of iBeacons. We haven't seen how that will play out yet, if that will be used for commerce as well as value-added services. We have yet to see if Microsoft will leverage their reach on the ECR, the cash register software. They are currently the operating system under a majority of ECR systems, so that could be a potential control point that Microsoft could leverage. And finally, one thing we have seen materialized, albeit in its very early stages, is a partnership between one of the existing POS providers, Ingenico, and Google. But where it gets really interesting, of course, from the perspective of schemes and payment service providers and processors, is the transaction data control, and also when we move to the discussion, or continuing the discussion that Zaf raised before, what is important for a bank is the customer data control. And we have still to see how these different OEM Pays will play in these different areas. Right now, they might not have that much of a strong position, but let's see how things will evolve over the coming months and years. Perhaps, Zaf, you will add a few words from a bank perspective, how you see these two different data control points, at least.
Sure, Kristian, thank you very much. So I think you've really rightly put it, and I will also refer to your previous slide where you mentioned about that, the pure simple OEM proximity pay. I think when we, years ago, when we were talking about NFC is not taking off and mobile first is not becoming mobile first, I think this is where we really went wrong as banks. We're just trying to replace the card with the mobile device, not offering more. And this is where I think this in-store, in-app pay has really come up. So again, Apple is showing us, or kind of non-banks is showing banks how to really ensure that we integrate our customers, offer them more than just simple tap and go payment. This was never our task, and I think this is where we are failing. So we should really lesson to be learned from there again. Referring back to this current slide now, I think the customer data bit is the most important one. Obviously, transactional data control is one that Apple has a bit of an edge, but I think we can still see that as, apart from Google, all three are in a way kind of lacking that. And I think this is where banks have a real edge to materialize, really being able to offer those extra value-added services for our valued customers. So I couldn't agree more with you, Kristian, on that one. So thank you very much for that. Next slide, please. So, we've been really closely watching all those OEM pays. First of all, there's so many pays as a bank, it really confuses as to which pay to go for. There's Samsung Pay, there's Android Pay, there's bank's own pay, there's what have you pay. And we've also seen this new trend that variables are also becoming quite popular when it comes to payment, and we might see more kind of in development on it. So we've seen that Apple has done it, and Samsung has also done it. So I think this would certainly become, and this will only matter because we remember that back in the days, not long ago, we had those passive straps, wristbands, tap and pay with Visa or MasterCard on it. So this is, I guess, this was quite expected. But more importantly, what would be the impact of control points on success for each pay? So this is something that we have been really looking into when we produce this white paper and this report, and more importantly, how this would affect a bank's own positioning within its offerings. So this is where I think that banks would have to really come to some sort of balanced compromise, if you like, whereby yes, should look into this OEM pays, but I think always should also try to go for their own pay, whether that's a full system with just simple payment implementation. And I think based on that, one of the challenges really is to how to develop your ecosystem and ensuring that a bank stays competitive. There is a return on investment, so ROI is really important. And talking of ROI, I think if you can go to the next slide, please. Thank you. So this is the key question. What's the business case for a bank? Why should a bank step into mobile payments? I face this question at least on a weekly basis, if not daily basis, from the board as to why should a bank step into payments? What's in it for a bank? Of course, all these OEM pays, all these kind of everyday technology services have helped the situation. So if a bank launches its own solution, it's great because then you have full control. You have you select which sort of service you're going to put in, how your UI, your wallet is going to learn, who you're going to partner with, what you're going to offer to your customers. You can really, you're the king then, really. But of course, it has the biggest con. Then it's really expensive, and it can be because you start from scratch. You have to build the infrastructure. You have to really think about who's going to be the DSP, you're going to do the transition in-house, what have you. On the other hand, if a bank decides to go and integrate within or sort of shake hand with an OEM pay, of course there are still some costs. In fact, some quite higher costs for startup fees. But I think that the biggest loss here for a bank would be the data, would be the customer, as to how a bank kind of what sort of agreement they come up with, and what sort of they depend on the business model. So I think the biggest loss here is not the money, but of course not having that freedom, that being able to reach out to your customer on your own, but you have to have this OEM with you. And of course there is also the revenue, transaction revenue as well to be shared. So you have to give a cut to this OEM. So I think all in all, this OEM based pays solution would certainly bring complexity when it comes to the future, the commercial future of the bank, and of course there's an indirect cost whereby this OEM kind of eats away some of the brand value, well, a lot of the brand value, as we mentioned already. So basically what we can really summarize that this mobile payments can be really crucial, and the banks are in a really difficult situation at the moment as to whether they should go ahead or not, and if they don't go ahead, how will they manage to ensure that their existing customer relationship stays intact, and how can they still reach out to their customers and offer them those services. So this is kind of the real key question from the findings of our white paper. Next slide, please. So based on that, one could suggest that the strategic consideration for a bank would be, although this is not a comprehensive list, a cost to bank, ensuring that compliance with the card scheme. So depending on your kind of customer base, whether you have more Visa or MasterCard, so depending on that, or American Express, what have you. So this is really important to ensure they comply with the payment scheme, because of course, since it's tokenization, there's a lot of new specs coming up. We need to make sure that you stay up to date with them. The most important thing again is the data. We keep mentioning data. I think Kristian also covered this in a few slides back, as to how does a bank ensure that if they were to go ahead and shake hand with an OEM Pay, how would they ensure their customer data stays intact? They can still use that data, reach out to their customers, offer them those great offerings and services. I think this really stays as the key question to me. Kristian, I'm not sure if you have anything else to add to that.
Well, maybe just one observation, and that is when a bank finds themselves in a situation where the ROI is poor, but they still know that they have to act on this. Then it's one thing is servicing customer relations and finding the right solution to that. But another thing is serving customer expectations. And I think that is where the OEMs, for better and for worse, are definitely shaping this industry by raising the expectations from the customers towards their banks. So with that in mind, I think the banks are more pressed to act now than they have been for the past 3 or 4 years.
Yes, absolutely. And this is why on the next slide we have tried to highlight the bank's actual decision and their outcomes. And before I go into this, I've just remembered something, Kristian. From your point of view, when if a bank goes and partner with another type of company or organization, so here I would use example of, say, an aggregator. So if you look in Spain, for example, you have a great example of Erste. So Erste became the kind of the HC solution provider, as well as TSB for a number of banks, including the CaixaBank, and there's the CaixaBank Pay is kind of based on their platform. How do you see in the near future or currently aggregators' rule? Do you feel that maybe payment schemes might feel that they are kind of they have a new competitor here in the shape of this aggregator or payment processor?
It's a very, very interesting topic, and something that I find myself increasingly spending more and more time on discussing. I think that there are two main dynamics here. First of all, I think the role of the aggregators and the increasingly important role of the aggregators come as a result of the banks understanding that this is not about competing on technology. So instead of spending too much time and resources on deciding on one technology or one solution, they outsource or partner up with aggregators to ensure that they cover as many scenarios as possible and get the benefit of scale across different types of technologies. Technologies where they have little or no option for differentiation. Similar to what we always known and seen in the card issuing, where I mean there are of course different competitors when it comes to issuing plastic, but it's not something that where you see a great demand from the consumers of one plastic provider or another when it comes to cards. So I think the banks are more and more understanding that they shouldn't compete on the core technology, but on the flexibility and also on the services. And then to your question about the schemes, the schemes are starting to position themselves as both aggregators and technology providers, and at the same time increasingly as service providers, also directly to the end consumer, and at the same time positioning themselves in the whole branding game. So I think the relationship between banks and schemes is becoming increasingly more strategic for the banks, and it's not just about who offers the best deal or the lowest price or anything. It's becoming an increasingly strategic choice, and that gets us back to some of the control considerations, where a bank needs to assess where do I get the better control, going with a scheme for these kind of services, or going with an aggregator or somebody else, or even doing it in-house.
Yes, absolutely. I couldn't agree more. So I think on this slide we have really, between myself and Kristian, we've really covered the first three boxes. So the last, I think the really important one, as a bank, I think what happens if a bank decides not to offer those services? What if the bank decides that perhaps it's just still not time yet? Let's just delay or not offer those services. I think that would bring in a serious issue when it comes to customer relationship, because more and more we see the customers are going mobile. Most banks report that mobile channel is kind of taken over. Almost reaching the internet channel. There are still a lot of services that can't be offered via mobile, but I think mobile is a great channel for reach out to our customers, and payments are no different. The offering of payment services are no different. So if a bank decides not to offer mobile payments, I think there's a great potential of losing that customer relationship and trust, and kind of what our customers expect from us. So it would be a real kind of disappointment for them. This we also felt while we were producing this white paper. And something else to mention is that as a bank, we would not want to become just a back-end pipe to provide these services while OEM Pays come forward and they start offering services. So I think as a bank, we really have to start thinking seriously if we decide not to offer these mobile payments, as to we don't want to become this back-end dead pipe, if you like, if I could call it that. And of course, and can always delay as well. Again, this would bring similar scenarios. We see how quickly things are changing. Not long ago, there was no HCE, and then HCE came out, and we had this HCE payment, and we had Samsung Pay, and Apple Pay came out, Samsung Pay, and now Android Pay, and Windows certainly also out there. So it's just I don't think it's as a bank we can delay anymore. I think it's time to really if there's no a bank does not have any offering, they really would have to sit down and really start thinking on how to deliver these services. So with that, I think we're also running out of time, I think. So I'm going to quickly wrap up by mentioning some of the key takeaways of our report. So this is not a comprehensive list. You would get the white paper, would include all of our key takeaways. So there are a number of key takeaways, and we feel that there's only two options for a bank. So they really cannot, one cannot sit back and delay further or not to go. They can certainly choose whether they share the customer or not. So go with an OEM Pay and have. But I think one has to say that in the given circumstances, the best scenario would be the bank launches its own pay. So whatever bank pay, offering the payments and services. But also, depending on the customer base, it may well be that they would need at least one or two OEM Pay. It depends on each customer, the customer base, and their needs. So that's just my personal take on this, and I would leave on Kristian to really sum it up at the end. What lessons do OEM Pay bring to us? So we have really covered all that. They bring new technology, new ways of reaching out to customers, new offerings. And one thing that we also really learn while producing this white paper was the value of the value-added services. So how important they are, and they really are key to success if we as bank would like to stay in this mobile payments business, because just payment on its own is not enough for a bank. And last but not the least, it's never too late to act, and it's certainly good to bet on more than one, as I mentioned already. Kristian, I would leave the last words to you, please.
Well, thank you, Zaf. I think you wrapped it up quite nicely. So, the only thing that remains for me to say is a quote that frequently comes up. It's not quoting myself. I don't know actually who came up with it first, but one thing that really applies to all the players here, especially the banks, and that is, if you're afraid of change, you like irrelevance even less. And I think that is that really sums it up quite nicely. As the banks need to embrace these changes, and they need to decide what they want to do, and they need to start moving. So with that, I think we will open the floor for questions.
Exactly, yes. I think we have received a few questions during this discussion. One was actually about the role of card present or not present, and that refers to this slide where we have in-app payments and OEM payments. So, so the question.
Yeah, I can.
Yeah, please go ahead. So the question was like, can you enlighten a little bit card present and card not present? What does it mean?
Yeah. Yeah. First and foremost, the card present versus card not present has been the paradigm in card payments since basically the dawn of non-physical commerce. So I think even before e-commerce as such, we saw card not present transactions by reading up your card details to a salesperson through the telephone. So that has been the dominant two solutions for many decades. And card present, obviously, especially in the EMV countries, means a high level of security, because you have the chip, you have the cryptograms, you have the both options for online and offline PIN validation, and that has meant that the fee structure for card present transactions have been driven down with the EMV migration in many countries, whereas the card not present has been the area where we've seen an increasing amount of fraud, since there is little security beyond entering the whole PAN and other card details online. With the introduction of the OEM Pays, we've seen an acceleration towards a third category, a new category, that basically sits in between the two, and that is what is increasingly known as the cardholder present scenario, where the physical card is not there, or not necessarily there, whereas securely issued and securely stored token is being exchanged, combined with some form of biometric or PIN, and that accounts for a better security solution than the pure card not present transactions that we also see in these card on file scenarios. So that means that e-commerce, also from a fee structure and from a security structure, is moving much closer to physical commerce, and that is a major change that has been, if not created, then at least accelerated by the OEMs.
Good, thank you very much. Thank you very much, Kristian. There was there's plenty of questions, really many. So the second question was, what do you mean there is no R or I? Of course, there is no R or I in the long run. Please, Zaf, go ahead.
Sure. Thanks, Zipper. I can try to aim to answer this. It's not it's a really tough one. There's certainly ROI in the long term, but as a bank, let's say I offer 10 different credit cards, for example. Let's just leave debit. Let's talk about credit card. Let's say I offer 10 different plastic cards. My customer pay fees for that. If I go ahead and start offering a virtual card, a non-plastic card, a card on HC solution, for example, our own bank's own pay. First of all, to ensure that customer adoption, you would normally offer that additional card free. So to begin with, there's no return there and then. And if you, I can only behalf of my previous workplace, so CaixaBank. If you look at CaixaBank, with a lot of contactless physical cards, low value payment had gone up already. So you need mobile payments to bring this low value, anything under 20 euros to go up, tap and pay, no pin required. So with contactless card, they were going up anyway. So again, there is no direct return of investment statement. And of course, not to mention that when you first step into mobile payment, there is initial investment. You need to look for partners. You need to design the wallet. You need to ensure that you have this whole thing working. So there's a lot of investment. So there is no direct, quick ROI when it comes to mobile payments. If a bank only goes ahead and offer mobile payments, unless banks start to offer couponing, ticketing, identity management using the same platform, same services, P2P, I don't think that there is such a kind of a direct, quick ROI. That's what I would like to emphasize on. So in the long term, maybe, but we need to ensure that we offer more services, not just payments, to ensure that there's ROI for a bank.
Good. Thank you. Thank you, Zaf. There was a question about those who don't have an OEM Pay compatible phone at all, and a good remark that the market is still very fragmented, and it doesn't mean that everybody can use these pays. So what would a person with Sony Xperia phone do? Would they be able to use any kind of mobile payments, even if there was Android Pay or Apple Pay or Samsung Pay in the market? It just doesn't work with these phones. So how do you see that kind of complexity?
Sure.
Yeah, want to go ahead?
I can also try part answer that maybe. Sorry, yeah, I can part answer that, and then maybe Kristian can also jump in. So I think for if I was to use an example of Sony Xperia, I think that's an Android device, presumably 5.1, a lollipop, whatever. So I think for that, the obvious choice would be an HC-based solution. So the bank would probably offer an HC-based solution for these kind of customers. I remember when we were delivering our webinar, we mentioned customer base. So I think each bank would really focus on ensuring there's no good a bank offering an HC solution if they're 90% or 80% of their customers are an iOS customers. Similarly, if they have a huge customer base of Android customer, it doesn't really make sense to offer Apple Pay when they have 90 or 80% Android-based customers. So to answer a quick answer to this question would be that Samsung Pay would probably not exist. Android Pay for sure, depending on their bank, if they were to offer that. So two solutions are certainly there for them: is HC-based solution, or even SIM-based if it's a really old model, or an Android Pay.
Kristian, do you have a comment on that? What about P2P payment type of?
Well, P2P payments are typically, or at least in many countries, increasingly well served across the different OSs, as the physical dimension is not as key as it is for commerce. So from a just like you can basically have mobile banking almost regardless of which phone you use, you can typically also have a P2P solution regardless of which phone you use. But I would just to comment on the fragmentation scenario, and that is definitely what we see. I don't think that the end state will be one to rule them all. I don't believe that we will see any of these players that we've discussed today, nor any bank basically rule a given market where everybody uses the same. So the ideal scenario is somewhere in between a scenario that I, in my work, typically refer to as a proliferation scenario, where you have many solutions on one side, but you have the aggregation on the other side, so that the solutions will work across, especially merchants, and also across different devices. So I think the solutions that we see that are very proprietary, that requires proprietary acceptance devices and such, they will probably have little chance of succeeding, whereas the ones that tap into some of the existing infrastructure will have a much better chance of succeeding. But I mean, we will not see 100% penetration of NFC devices anytime soon. No, we will see 100% acceptance of NFC payments. So there will be ample room for alternative scenarios as well. And I think many of these will go hand in hand, similar to different card solutions, different card schemes. I mean, look at my wallet. I carry different cards, and some of them I can use some places, and others I can only use at dedicated merchants. But still, I carry them because they give me some other benefits. And I think we'll see similar scenarios in the mobile payments as well.
Somewhat related question is the next one. So what are the alternative services and/or developments that banks can use to fend off competition?
Well, I mean, leave
sorry,
it to Zaf to answer for a bank, but the question if the goal for a bank is to fend off competition, or rather strengthen the offerings that the bank brings.
Kristian, we are losing you. Can you speak to the microphone, please?
Oh, sorry. I don't hope that. Is it better now?
Yes, it's better. Thank you.
Okay. I wasn't moving, so it's probably the wonderful internet that is breaking up. Now, my point was that it's. I mean, banks have been facing competitors all the time, all their existence. So the change is not to fend off competition. That's a fact of life. Banks will always have competitors, but they're just facing new types of competitors. So I think it's more a matter of finding the right way to either embrace or strengthen their or embrace the competition, or strengthen their current offerings to their customers, rather than to try to prevent competition from happening. And Zaf, please elaborate from a bank perspective.
Yeah, sure. Thanks, Kristian. So I totally agree with you there. I would just like to add that I don't feel that banks really have this sort of competition, because what is, as a bank, the real asset is the customers, their trust, their data, and their confidence in the services and the offerings that we do. So I think we have a great opportunity. I would call it opportunity rather than a fending off kind of competition thing. That we have a great opportunity to be able to offer our customers more than just simple payments. Why not offer them something within within the existing mobile banking application or a wallet application, but something more than just payments. So other services such as I don't know, nearest something like some kind of couponing, vouchers, P2P payment, even a branch locator within it, being able to kind of if a customer wants to make a payment in installment within for that specific large payment, we could do that. We can even start offering new product and services such as short-term loan, overdraft facilities, as and when and wherever our customers need. So the biggest plus as a bank we have with this mobile device is that the channel is always with our customers. They always have it. So when they go to a big store and want to buy something and there's no funds in their account, we should be able to offer them there and then. So I think as a bank we have a great opportunity, not a challenge, but an opportunity which these non-bank would never have. So I think we should really realize that and build on that.
Very good, excellent. We have loads and loads of questions, so I choose two short ones to finish with, and we will return via via email later. So first a question to Zaf maybe, how long typically does it take from a bank to develop its own solution? And the second one, so very briefly, second one for Kristian, are you planning to elaborate more the topic of value-added services in case of mobile payments as such? So very quickly, Zaf, how long does it take? And Kristian, VAS.
Sure, I think it's a really good question. So I don't think there's a right or wrong answer. There's no such kind of time frame that in 12 months you must be ready up and running. I think it depends on each bank. But I would imagine that in today's date and given time, I think most, if not all, are really looking into it. So there's no time frame. I think it depends on what and sort of services the bank wants to offer. If it's just a basic mobile payment services, I think it depends on whether they want to do everything in house. So if they want to do, say, HC based solution, if they want to do everything in house, or they want to higher services of existing HC solution providers. Same goes for TSP. So whether they want to do in-house, they want to build everything, same goes for the wallet, or they're going to take an SDK from an existing HC solution provider or any other third-party wallet, and they build upon that. So all these factors need to be taken into consideration. But I don't think there is a 6 months or 9 months or 12 months kind of time frame which one must adhere to. But I think in today's this time in age, I think between 6 to 12 months, I think that's a good enough time, depending on which solution a bank would decide to go ahead for.
And Kristian, the VAS.
I'll try to do that very briefly. I know for a fact that many banks, especially at least across the Nordics where I operate, are looking into value-added services. I also know that many are struggling to identify the right value-added services. I think value-added services have become the King Solomon's mines of mobile payments. We all long to find them and expect that is where we'll find the gold. But I think it's difficult to come up with a one-size-fits-all here, and I think it's will depend very much on the individual bank what kind of value-added services their particular customer segments would want. That being said, we did a survey in the Nordics, and the most requested value-added service was actually e-receipts. That might be a case of people not knowing what they really want, since we haven't shown them many value-added services to choose from, but that came out as a clear winner across the different Nordic countries at least. I don't know if that applies, but at least we know for a fact that in the Nordics that's a very popular value-added service that customers are requesting.
Excellent. Thank you. Thank you very much for very good questions, loads of them for us to answer still tonight, tomorrow morning. Due to the timing, I just have to bring this webinar to conclusion this time, and I would like to really convey my thanks for the entire work group that has worked fantastically on this report, as well as to everybody who has attended today's webinar. I hope that it has been of interest to you and very useful for you. And any feedback, if you have, you just get in touch with us, and any future improvements, please let us know. And once again, many thanks for your attendance, and goodbye on behalf of Mobey Forum.